Welcome back to the Kingscrowd Podcast. I'm your host, Brian, joined as always by Scott, advisor to Kingscrowd. How are you doing, Scott?
Pretty good. Yourself?
Pretty good. Yeah, we got a couple different topics we want to talk about today. Three big things. First off, 10 years of Reg CF. Happy 10th birthday. It's as of May 16th, the 10-year anniversary of Reg CF. We'll give a quick recap of just capital raised and quick overview of how those first 10 years have gone. In addition, second, we want to talk about something big that dropped last week. That is the draft, 309-page draft. It's very light reading, Clarity Act. So the Clarity Act, for those who aren't familiar, we'll be getting into it, what it could potentially mean, both for crypto assets being issued as securities, but also what it could potentially mean for the investment crowdfunding markets, with a Reg Crypto also being mentioned. Thirdly, last but not least, Spirit Airlines has had a kind of crowdfunding pledge offering campaign going on, not formally being done through the SEC yet, where they have apparently raised more than $337 million in pledges from the crowd. So we'll be getting into that. Let's jump into the first topic. So just wanted to mention 10 years of Reg CF. Now, we've covered Reg CF and kind of the first 10 years on past episodes recently with the pod, but at a high level, crowdfunding, regulation crowdfunding, we've had more than 8,700 companies to date, and looking at the Kingscrowd data set, that have raised over $2.4 billion. The typical investment being around $1,700, $1,800 on average. If you look at Regulation A, since that went live, per the SEC's own data, there's been more than $10.5 billion raised from Reg A. So a lot of that too is not just operating companies, but real estate deals, syndicates, that type of thing. All in all, we're looking at more than $13 billion raised over the past 10 years. Definitely, I think something that 10 years ago, this was very unproven. Was retail even going to be interested in investing in this? But, we've seen some investments. Now, we've also often talked about the headwinds that the industry is experiencing on this podcast here. But Scott, any quick takes just in terms of the 10 years of Reg CF or where the next 10 years might be taking us?
Yeah, I mean, it's exciting, the fact that it's still here and it's growing. We've talked about this kind of week over week. You'd like to see more. I mean, 10, 12, 13, 15 billion sounds like a great number, but when you think about it over a 10-year period, and really is like the majority, that's probably over like the last 3 years. I don't know. It's gaining steam. It's exciting. I'd like to see more movement faster. I'd like to see the regulatory environment, cleaner. I guess we'll talk about that in a minute with the Regulation Crypto potentially. But it does make me wonder, this all happens to kind of open up the crypto world. All of these things that just the evolution of public investing right now has so many roots tied to this Reg CF stuff that we've been talking about for 10 years. It's weird to me that people now are entering the space and talking about all the, investables and access to things without recognizing how far this has come. And that there was a world, not even 10 years ago, really, where the idea of you investing in anything other than calling your guy at Edward Jones was just not possible, and now it's we're taking for granted that you can be in real estate and creators and this and startups and PE funds and just all this shit. And we just don't really talk about it. It's kind of crazy.
Yeah. I think, some of my take on the industry and where we've been in these past 10 years is it's proved some things, right? Retail want to invest. There's a definite interest here. And keep in mind, right? A lot of the really kind of early crypto stuff kind of started the first hype phase. I mean, way back, but 2017. So around the same time frame, a lot of this was launching. And then really 2020 timeframe, 2021 is where I think the investment crowdfunding market took off and where a lot of the crypto stuff took off. And it seems like we're coming to this place, this juncture, right, where the people who've been interested in investing in startups and private markets that maybe didn't know anything about crypto, didn't have any interest in crypto, and all these people who are really crypto native, who are hardcore, Bitcoin maximalists, ETH investors, know all the different altcoins. And we're kind of coming together now, which brings us to our second topic of the Clarity Act. So the Clarity Act Basically, at a high level, you can just know that the Senate Banking Committee voted to move this on May 14th. So it's going to be going towards markup and basically getting a look at where the Senate is going to try and pass this. Now, what the Clarity Act does a lot of is it's going to be helping to clarify, provide clarity. What is a security token, right? So it separates kind of security tokens regulated by the SEC versus just general kind of tokens that aren't securities that will be regulated by the CFTC. Now, a big part of the Clarity Act, or one of the parts of the Clarity Act that we kind of knew was coming, but we haven't really heard it publicly mentioned yet, is called Reg Crypto. And it's essentially a new offering framework for crypto projects. So when we talk about regulations, think of it as basically an exemption. If you're not a public reporting company, you're going to raise capital from people and you're not publicly listed, you need to meet one of these exemptions. So traditionally, that's been what we talk about here: Reg CF, Reg A, Reg D, being a private one, et cetera. This would introduce a new one called Reg Crypto that would allow certain issuers that kind of meet the guidelines to be able to raise up to 50 million over a 12-month period. So kind of interesting, right? Where that falls between the 75 million upper limit for Reg A and the current 5 million cap on Reg CF. But it would essentially allow those issuers a new pathway to be able to raise capital in a compliant way with the SEC or in the eyes of the SEC. Now, I think there's still a whole bunch of questions here, like what are the disclosures going to look like? Like, are they going to have to do some type of filing with Edgar, similar to a Form C or a Form 1A? They'll probably have some type of disclosures they're going to have to do. But it's going to be a tight timeline to try and pass this, right? Because they're trying to pass the Clarity Act. Originally, they were saying, I think by like this weekend, by Memorial Day before the break, but then there's some other breaks coming up before the midterms. So like really, if they're going to get this done, there's still a bunch of things that need to be worked out. But let's focus on the Reg Crypto part of this, Scott, because I think, to date, there's been asks of the SEC to say, hey, let's increase the cap of Reg CF from 5 to 20 million or different numbers. We should be increasing Reg A from, say, 75 to 150. Is this the SEC kind of just saying, hey, yeah, we're going to look at a new pathway for people to be able to raise capital? Or are you really kind of starting to interpret this as, is this a new asset class kind of that they're trying to handle in a special way? Or what's your take on Reg Crypto?
Yeah, it's interesting. So I would say from the start, the Clarity Act. I think what we're looking at there is a lot to do with just the massive interest, particularly retail, with the prediction market. I think that's one area that has really blurred the lines where it's like, wait a minute. We used to have, is this an asset? Is this token? Is this crypto? Is this real? Is this a speculatory? Is this an asset? Like, what is it? Now we're literally betting on guesses. Like, this is like tokenized guessing. It's neither crypto nor asset, but speculative nor derivative.
While you're mentioning it, I just pulled up the Polymarket odds. Will the Clarity Act be voted into law in 2026? 64% saying yes right now. So
yeah, so it will be. So that's probably somebody in Trump's
two-thirds
office
chance.
Right
Yeah, according to Polymarket.
Right there you go. No, like there's just a lot of tools and stuff that's coming together right now. And I think there's a lot of clarity needed in order for it to really work out. And one of the areas that brings into question is like, if you're trying to wedge an answer for this, if you're trying to raise money, you're trying to make yourself legitimate. We saw this with like the gaming stuff in early DraftKings days. They tried to basically say it's a sport, it's a skill. It's not a skill game. It's a guess game. Like, it's a lottery thing. Like, everyone's trying to like wedge and figure out who they are in it. Which ends up happening, is my guess. This is probably the origin of this. Is one of the lawyers for one of the sides saying, well, if I just were to apply this to Reg CF, or I were to do a Reg A plus on this, and it was 100 million limit, or whatever the case, 75 million limit, like, we could do this and we could do this. We just have to qualify. And the SEC is like, whoa. We're not going to turn this into 5 conversations at once. We got to put it in one box. We need to determine what is an asset, what is digital, what is not. What do we expect from you in order to maintain that status? What to make sure it's a security versus speculative or whatever. And then we're not going to have you come off the trail and then go over here and try to Reg CF and then tokenize your reg and then do, how do we keep this in one box? That would be my guess as to how regulation crypto found its way into the mess, because it's like, well, we have to address this. So that's there. It's also a clean slate opportunity, which in some regards, and I think we've talked about it enough. Like, I think we understand why we got here. Reg CF, original Reg CF, was so built protectively, was so built to be like almost in like to make investors not participate, almost like scare you to the point where it's like you have to jump through so many hurdles that you really have to want to do this to do it. And then they were like, oh shit, there's actually, there's a lot of people who want to do this, a lot of applications. At the top of the show, we talked about the 10-year thing. Part of that is like product market fit. You're just, everyone, both sides is trying to figure out like, what is retail appetite? Retail is trying to tell you, now that I have appetite and demand, what I like. So I dabbled, I did this, I did this, I did this. These assets take too long to get returns. So now I'm over here. And they find their way into what they like. And it turns out what they like is they like large crypto projects. They like hype-led momentum, things that are topical. They like companies and things that they generally get to see and use in real life, and they love gambling. That's what retail likes. And by the way, in all those scenarios, they like their money back same day. Even if that money back is a loss, they want it back resolved same day. They don't have patience. So if that is what we learned, and we also know that the asset side of this is like trying to figure out the best way to access the most amount of capital with the least friction, you end up in this place where the SEC is trying to figure out how much money is enough, how much is too much availability, how do we make crypto projects not become ICOs, which then turn into fractionalized investing through NFTs, and that turned into a shit show. And now you hear everyone talk about RWAs, real world assets. That's a new little acronym. So the SEC is like, we can't have this happen a third time. So we're going to either declare an asset or we're not. And if it is an asset, you're going to follow these 3 steps, and you could raise up to $50 million. And I'm going to guess that their money, and probably part of the reason that we've been playing this game for 10 years of 5 million and 10 million and 50 million, 75 incremental is in crypto. You've seen multi-billion-dollar collapses that literally collapse entire funds, have major impacts on retirement funds. Yes, 100 or 75 or $50 million fraud is terrible. And there will be people who get totally wiped out, but not that many. It is not at a scale that has like real implication, externally throughout an economy. And I think that's what they're protecting against. So I think they're looking at this going, can you raise up to 50, which is plenty of money for most? And you could, of course, do it again. And I'm sure if it becomes common, they could add another thing to it. But like, this to me looks at someone who's looking at the whole market and going, we could patchwork this, we could combine these, but why don't we just create a new one that actually kind of speaks to what we've learned from the past and make sure we don't repeat it in the future? And so like when you read that to me, that's what that reads like to me. My immediate thought and question back to you on it is like, is this designed for tokenized projects, specifically crypto-based native? Like, for example, with Gigastar, we talk about the creators, you can invest in them, but they're tokenized creator revenue shares. It's tokenized by its nature. But like, I could literally tokenize anything I want. So is this just telling all of these people, like, you should just like skip fractionalized traditional investing, paper investing? You should just skip it and just slide on over to this tokenized world because that's where we're spending our time? Is that what they're asking? Is it like for traditionally native crypto projects only, and it's the pathway for them, meanwhile everyone else stays over here? Or are we literally saying like, hey, you want to raise 50 million bucks and you don't want to dick around with stuff, just make it a tokenized offering? Is that what is your read on that?
So that's a great question. So I haven't gotten a complete understanding myself, but from my read of it, I'm thinking of it in kind of 2 buckets. So there's still tokenized securities. Think of this like traditional stock, your safe, your convertible note, whatever else, that is still a normal security. It is just tokenized, so it's a little bit easier to kind of move, right? Could be for any company, could be for a bank, it could be for a funeral home, right? Whatever.
Well,
In that case,
hold on, Brett. I asked that just because
yeah,
the difference, it's very important for this industry. The difference there, I'm a broker dealer, working the streets like any Wall Street guy, but I do it in the retail world. If I'm in the business of chasing down new assets, raising capital,
hmm
and I run like a tokenized platform, this act swings the entire shit in my direction. If I am running around trying to find deals to represent, to bring to market, and it's all traditional, and you're asking me to then tokenize it as not an expert in that, like I am really seriously curious, as like, because if this is something that effectively replaces, even if it doesn't replace, but like shoves down Reg CF and Reg A, and you're just saying go this route, I don't know that.
No, I
Like,
agree. So I'll finish what I was saying. So tokenized security, those are still going to need, in my opinion, from how I read this, to still use Reg CF, Reg A, Reg D, et cetera. So there's no difference there. The fact that you're tokenizing your security, we can't just go say, hey, let's do a bucket of tokens, and because it's going to be tokenized, we can raise up to 50 million. I don't think
yeah,
that's what Reg Crypto is saying. It's specifically built for some of those things that are digital commodities, like crypto native tokens being built on blockchains tied to a protocol or a network, where basically the legal framework is trying to determine, like, how can you sell it right before the network has matured and kind of moved to a certain stage of decentralization. So like before Ethereum or Bitcoin or whatever your token of choice, right, kind of got to where it's at today. Back in the day, right, would have had an ICO. I'm sure ETH, I
yeah.
think, had an ICO. So this is saying, like, for that ICO, how would it be regulated? And that's what Reg Crypto,
So
in
now
my
they're saying
mind.
you have to. You need, if this goes through, in order for you to raise for a new crypto project via any exchange of public entity people, public investors, you're going to have to go through Reg Crypto.
Yes, that's my take. And again, this is still up for debate. There's still a lot of this that can change, but normal startups, sounds like, are still going to have to go through Reg CF, Reg A. If it's a token kind of representing, the crypto native assets tied to a blockchain, that's what potentially you got to put together a plan. Sometimes it's like X years into it, we're
Yeah.
going to be decentralized, or you meet certain criteria, then it no longer is kind of treated as a security. So there's all these different things and still gray areas, but that's the
Well, then,
discussion
yeah.
though,
I
is
mean,
I'm
yeah.
people are going to be incentivized, not incentivized, but people are creative. They will find ways to be like, oh, well, if we do this and we kind of structure our stuff like this, maybe we can actually just go towards Reg Crypto instead of needing to do Reg CF. It's kind of a cynical take on things, but
Yeah, usually I'm the cynic. Well, I mean, in that case, then I would take back some of what I said. I don't, I guess my understanding of it was that it could potentially replace the existence of the others. Now, when I think about it the way you're describing it, I go backwards, and I think actually it just makes it pretty clear that Reg CF and everything are probably going to move to 50 million, and Reg A is probably going to go up higher. And what you have is like, this is for a traditional company, and this is for a mini IPO, and this is for those who are raising on a project, because that's what we're
yeah.
seeing happen. And we don't, like, we want to give them, it's like, it's actually more protective. I was thinking when I first read it, my first instinct was like, here's a way to basically kind of do an umbrella and like protect people a little bit, but like more access is being granted. When you read it back to me, I'm of the other opinion. I'm actually thinking like, no, this is actually in line with Reg CF. And it's making it, again, more protective for investors, not less, which is, I would say, is a good thing.
Yeah. And I think to your exact point there, that's where I kind of wanted to bring the conversation is this, we've already kind of seen the past 10 years, right?
Yeah.
We talked about 10 years of Reg CF. Next 10 years of Reg CF, what does that look like? I mean, if Congress is willing to discuss something like this up to 50 million, everything else, making things more digital native, I got to imagine some of these are going to flow down to Reg CF eventually, right? Where it might make Reg CF increasing the cap becomes more accessible. Yes, that makes sense. If they can do up to 50 million with Reg Crypto, if they're doing up to 75 on Reg A, maybe we can increase that Reg CF cap. Also, I think we're going to learn a lot just in terms of the way these tokens, right, when they're on the blockchain, the way they get traded, how liquid they are, all of that. So that's where I still wonder if, much further down the road, we're not talking Reg Crypto
Yeah.
Clarity Act, but it feels like some of this stuff, eventually is it's talking like kind of two sides of the coin. It's like two sides of the same thing in some ways. Where to your point, it's not necessarily in place of Reg CF and Reg A, but it's kind of complementary too.
I would say the way that you described it versus the way that I interpreted it would side with what you just said. My first interpretation is like, oh, there's so much redundancy in here that the only difference is tokenization, in which case my natural break the law brain is like, oh,
Exactly.
we'll just tokenize this shit and we'll call ourselves a
And
project.
that's what I think
Like
a
you said.
bunch of people are going to do. I think they're going to hear Reg Crypto. They're going to think, oh, tokens. If we tokenize our stuff, we can do Reg Crypto. Let's do that.
I'm gonna say something nuts. You asked the question, a very scary one. 10 years from now, what are we doing? And I will say this. I think that, and this isn't just like the crazy AI guy, like things are moving at such a fast pace. The evolution of the types of companies, not even the types of companies, the way companies are being set up, the way people are building their teams, like what we used to think of like, I have an idea, I vet it, I talk to a few people, I hire a few people, I hire an engineer, we start building it, we go to market, we do blah, blah, blah. Like I used to feel like I could take 2 or 3 years on an idea and generally like kind of carve it out and go raise money incrementally as I need. I'm not exaggerating, Brian. I feel like I have probably 3 hours to come to like an idea of whether or not I'm committed to something. And I've got less than 3 months to like go from zero to something to test to build and be out. And then I can fund it if it's taken. Like it's so fast and so many things are being upended and just completely replaced and built in like I'm not joking. In a call I had in the morning, I'm like, oh, that sounds like a great idea. And by the afternoon, I had my last call and somebody else is talking about it in a different way. And I'm like, I think that shit's dead already. Like, and it started this morning. Things are moving so fast that I actually think that like while there's probably this like little window here where people will take advantage of these rules, I kind of feel like we're going to start heading into a new era of this investment cycle that we've never had before, which is like for those who for various reasons, whether it's access to capital, it's what a number of reasons wish to stay private. Those businesses are going to stay private, and there might be sales, secondary sales by former employees or things like that. But otherwise, private until major IPO, if ever, if ever. I actually think you're going to start seeing in the next 10 years all these rules, these Reg CFs, these Reg Cryptos, they're just like catalog tags. Like I'm part of Reg CF and a Reg A and a crypto because I offered a project and maybe it'll all be consolidated under one. But generally speaking, I think you're going to start seeing a lot of companies go public mini IPO style Reg A plus public earlier, not because they can't raise capital or this or that. There just aren't companies going to go public like they used to, and all the values getting sucked out of private companies. So retail investors are like, hey, if you can feed me something early, I'll get involved in it. That said, regulatory scrutiny is going to have to get much tighter. You can't just go Reg CF style to 5 million or 50 million in the future and let a bunch of people become bag holders. There needs to be a structure, but I really do think that it's going to be a very short period of time. You're going to see a lot of change where companies are moving so quickly that the markets need to move faster. And you're going to start seeing like I guess my point is there's just not enough time for people to try to game the system. There will be one-offs here and there, but largely shit is moving so fast that I think you're just going to start seeing like, hey, a trend just like emerge in like 18 months. It'll just emerge one, then another, then three, then five, and then it's just a fucking thing where companies are just offering up 30% of their business earlier to retail and private investors to participate and price them out. And it's just going to be a very common thing, I think, because you're going to have so many companies that look so different from the past. You're going to have companies run by automated, AI agents times 1,000, and like 5 guys and a girl and a bunch of agents, and that's the company doing 100 mil a month. Like that's going to be a thing, and I don't know. I don't think the old school way of doing things is going to last much longer. That's how I feel. Maybe that's just my brain, but it feels that way.
No, I mean, when the Jobs Act was signed into law in 2012, crypto did not exist. Like
Right,
Bitcoin had not even launched. Like this was nowhere even on the radar of the
right.
legislators who signed that into law. So I agree. I mean, trying to predict, especially now with AI and everything happening, just the velocity of change, it's impossible to predict a year out, never mind, 5 or 10 years out. Um, but I guess my big takeaway from this, we'll see what actually happens. Again, so Polymarket's saying
Got
a
to pass first,
64%
right?
chance. Is it actually going to happen? Are they going to come to an agreement? I know there's ethics clauses and other things that once those get on the table, we'll see if it actually moves anywhere. But I think for me, it's, a positive, optimistic take is that this is Congress kind of acknowledging and trying to stay up with the times of saying, hey, we need to modernize some of these rails. We need to think about things like the liquidity, like the transferability, the secondaries, and everything else. And if nothing else, assume clarity goes nowhere. Hey, maybe Congress is a little more educated. Maybe this helps with some of our other
Yep.
discussions to move the industry along. Um, but I think there's also a public awareness thing, which if we kind of transition into our third and final topic here, of just so many people in the US still have no idea that they can invest in private companies. And the third news story is, as I'm sure many people heard, Spirit Airlines basically just shut down overnight at like 3 a.m. on May 2nd, told people, hey, we're closed and you're stranded wherever you are. Shortly after, there was a website put up called Let's Buy Spirit Air, where people are basically looking to crowdfund to buy back the company out of bankruptcy, from my understanding. And as of May 9th, had pledged $337 million from 371,000 backers, an average pledge of $907. But the kicker is a target raise of 1.75 billion. So long way to go. I mean, 1.75 billion is huge. Some of the things, assuming they're maybe doing this under testing the waters because they say like these are all non-binding pledges. So the first thing you got to wonder is like how much of that 337 million is real, right? Like how many people would actually pull out their wallet and pay. But the second thing is if they really need, 1.75 billion to buy it back, there's still a lot to go there. And you can do things like an ESOP, employee stock option plan. You can, get some maybe bigger institutional backers or banks. But I think, if nothing else, this is also showing just, again, the public's interest in taking more ownership in some of these private companies. They care about ownership, they care about participation, wanting to, kind of put their money where their mouth is. Now, there may be other things going on here as well, just in terms of, I'm sure there's a lot of people who are doing it because you get a free ticket. I think it's like $45 is the minimum pledge, and that gives you a free Spirit Airlines ticket. So wanted to bring this up because could turn into a potential campaign, but even if it does, they're limited to 75 million under Reg A, 5 million under Reg CF.
Yeah.
There's 337 million pledged. So where do you think this goes, Scott?
Nowhere, probably. I mean, the should I invest in Spirit Airlines? I don't think investing in airlines is a very good business for most people. They need, I think the bailout was like a $500 million was what the government could do and didn't do because it wouldn't have done anything. So 300 million doesn't even get that. I would not do this. That said, I agree with everything else you said. And I think I've said many, many times over for years on end that one of the most powerful, cool things that this whole industry brings to bear is there is a future where activist investors who are not asshole Wall Street guys being paid on the side from said P firm to do XYZ, who are like, hey, here's, this is a bad example, but it's funny. Here's Blockbuster. It's done. They're like in the trash heap. And we could all pool 75 mil, whatever it is, pay to own the rights to it, buy the business out of bankruptcy, whatever the case would be, fund it for a year to try to build it and do something else. I think that you're going to see all these different jobs that are disappearing in companies that are going to become kind of shells. And it's going to open this door for entrepreneurs who are like, hey, why don't we put together our own kind of recovery funds and go buy up IP and companies and things that have potential that just, because of the way that their current paper is stacked, like it's not valuable to said PE firm, but it could be valuable to us. And I do think that's an avenue where you're going to get retail investing privately into companies. This is kind of that, right? Like this is a very big version of that and probably not a great example of what would happen, but like there is potential for this. I think that you saw a version of it with GameStop and others that is warmed up with how retail wants to back into stuff. And in the end, all this reg talk is really about like at a certain stage of a business's size or the fund or whatever the case may be, you have to follow certain rules to allow retail to participate. In the case of public, it's these rules because they can sell it. And here they maybe can't. I think we'll be playing this chicken and egg game for a really long time until there's truly a secondary that is like two-sided. That is not just people selling bags of shit and people who are like not really buying. We need a true secondary exchange that deals in all types of private assets that are just not yet public. These are all steps in the direction that lean towards retail having a vested interest in all of these things. No question.
Yeah, I agree with a lot of what you said. I honestly don't know kind of what the plan is here. I'm sure it's going to be an uphill battle because, private equity is going to move fast to buy the assets. If they're going to outbid if 337 million of pledges, and like from what we see with testing the waters campaigns, you never get 100%. Like people won't respond, they won't commit. They might have committed to 1,000, they're only going to give you 100. So it's going to be some number less than that. Granted, that was the last. They call it an audit, but basically it's like a pledge review of like how many funds were pledged. That was back on May 9th. So maybe it's gone up to $1 billion since then. It could be a lot higher. I think they probably would have published it if it was. Yeah. But, I'm seeing parallels here, for better or worse, right? Like, remember in 2021, DAOs were the whole thing. Remember decentralized autonomous organizations, and there was the Constitution DAO where they basically raised 47 million in Ether to buy the U.S. Constitution, or an original copy of the Constitution at Sotheby's that was being bid. They ended up losing. I think they lost to like Ken Griffin or one of those guys that they were trying to beat. But anyway, it's encouraging that like people are willing to pool their money in these ways for causes that they believe in, for missions that they believe in. It's not always going to work out, but like we're still in the super, super early days. I think we're going to see a lot more of this. I think the more that this happens, it's going to get more publicity. People will start thinking, oh, hey, I didn't know that was possible. Maybe I should think about this in other use cases. I actually think the Spirit one uses the Green Bay Packers as an example, where the Packers, and it's a little bit different situation. The Packers isn't a perfect.
Because you don't actually own
it, but they'll say they're owners.
Yeah, it's a certificate.
Right, but this is getting to actual ownership, and then when and if one of these things actually does happen, where the crowd is able to come together in a way where they're greater than the sum of the parts to do something they believe in, I think that's going to be really motivational and just like cool story. If nothing else, it's getting lots of press, right? Which is bringing more attention to participating as an owner, thinking about things like, hey, we can get involved in the private markets where this wasn't possible 10, 20 years ago. You couldn't do something like this. There was no vehicle to be able to do this for like retail, right? So I'm encouraged for this specific case. We'll see where it leads. I'm a little bit maybe pessimistic on the pessimistic side, similar to you in terms of what's actually going to come of this. But
I just wish this wasn't always hype cycle driven. Like this economy we're in can't sustain itself on in between, basically every 5 years there's a hype cycle. We have an ICO cycle, then we've got an NFT cycle, then we got this, DAO cycle, and everyone wants the self-ownership and the shared attention economy cycle. Like, if that's all we're going to sustain on, and it's not actually like this, the hype cycle is that I love that all companies are now available to go public earlier. Like, if you're using this to create a minor league system for public markets, then I think it's sustainable and it's interesting. You've got my attention. If it's going to be the on-off, Twitter cycle of like somebody popped because of whatever made it go viral, it's not. And by the way, all of those ended up horribly.
Most of them did not end up well, but anything else to say on Spirit? Otherwise, I know we're running a little bit over here. So
no. I think it's, I love the idea of bringing attention. I just, be cautious.
Yeah. And to be clear, like no money is being collected. These are all just pledges today. So I think it'll be interesting just to see where this plays out, but it's just something we wanted to highlight. Well, let's call that a wrap for the day. Scott, always good chatting with you. We'll see everyone back here for the next Kingscrowd podcast. I'm sure it'll be more great news. We'll break down the online private markets and everything happening. So see you back here next time.